Hello everyone, my name is Michael Valtos. I'm the founder and trader of Orderflows.com, and I'm pleased to present my newest presentation on the Valtos indicators, order flow analysis without having to read an order flow chart. So let me ask you, does order flow analysis confuse you? This is an order flows chart. There's a lot of numbers, a lot of red and green, sometimes you get blue, a lot of boxes, just a lot of numbers, and for some people it's a bit confusing, honestly. If there was a way you can take your analysis from an order flows chart and put it on a normal bar chart, would that be of value to you? So who am I and why you should listen to me? Okay, my name is Michael Valtos, and I've been an institutional futures trader for about 20 years. I spent 8 years at JP Morgan, 4 years at Cargill, 3 years at Commerce Bank. These are big names. These are big trading firms. It's not like I just graduated college and I started trading Forex in my dorm room, with a micro account of $50, and all of a sudden I think I'm the world's greatest trader. This is what I did for my living. This is how I put food on the table and a roof over my head. So for over 20 years, I have traded at the institutional level and studied virtually every futures market and made thousands upon thousands of trades. Do I think I found the holy grail when it comes to trading? No, of course not. But what I can say is I'm confident that the trading strategies that I've developed are among the best you'll find in today's market. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay. Order flow analysis is being pushed on the trading public as if it's the next great thing, but actually order flow has been around for a long time. It's just that without computers, it has been difficult for many traders to understand what is going on in the order flow, let alone understand how to read it. Some people will have you believe that it's possible to find opportunities in trading which are no risk. This is every trader's quest. In fact, a lot of traders enter the market thinking their trading will have no risk at all, or at the very least, very little risk. That is their downfall. For the last several years, I've been teaching traders how to read and apply order flow in their trading. However, I've noticed some traders took to order flow while others just couldn't wrap their head around it. As a result, I developed 3 powerful order flow indicators to help traders use order flow analysis in their trading without having to work through an order flow chart. Again, this is an order flows chart. This is in the E-minis, and for me, I've been trading with order flow for most of my career and in depth for at least the last 10 years. Once the information was really put in a easy to read format. But as you can see, for the untrained eye, there's a lot of numbers, a lot of boxes, a lot of red, a lot of green, a lot of blue. If you don't know what you're looking for, then what's the point? So what my goal was to take my analysis. I could look at this chart and see, what, there's a nice buying opportunity in here. And what I did is I wrote down my steps, my analysis, gave it to my programmer, and had him put it into a code that can just mark on a normal bar chart where you should be buying. Right here, you got the blue arrow. So it takes all this information in here, puts it, analyzes it, and just plots it on the chart. Say, hey idiot, this is where you should be buying. I say, hey idiot, no offense to you. It's more on me. When you're looking at an order flows chart, there's just so much information, and sometimes you're going to miss things. I miss things sometimes. I've got many different ways of analyzing order flow, and sometimes, I need a whack in the side of the head saying, hey idiot, don't miss this. So you can see there's this is a nice move. So I've taken my 3 best order flow tools and had them programmed into NinjaTrader so that they'll work on a normal bar chart. So there's no more trying to make heads or tails out of an order flow chart. You can use your existing chart. It runs on NinjaTrader. NinjaTrader you can download for free. They have a free version, a paid version. It will run on the free version. The paid version is if you want to route your orders through NinjaTrader brokerage or one of their approved brokers. And I'll be honest with you, I love order flow analysis. That's the foundation of my trading for nearly 20 years, but I realize order flow is not for everyone. That's why I created this Orderflows Valtos Indicator Suite. Imagine having the power of order flow analysis without having to deal with reading the footprint chart. Well, now you can. Again, the footprint chart. Okay, there's a lot of stuff in here to digest. You got this green line is the high of the day. You hit the high, you start to come off. Well, should you be buying it or should you be selling? Are we going to go back up, make another new high like you did here, or are we going to hit this high and we're going to sell off? And here you get the indication right here with this red arrow, and again a nice 5-point sell-off from the high. Anytime you hit a high or you hit a low, you want to know, are you going to bounce and then retest that high or low, or are you going to go in the opposite direction? That's the power of order flow. Order flow will help you make that decision. So what is the Orderflows Valtos Indicator Suite? Well, there's 3 indicators. There's the Valtos Flip, the Valtos Transition, the Valtos UTurn, and each indicator reads a different aspect of order flow. So, honestly, I think I say the Valtos Flip is more for very short-term trading. Although you could ride it out, you could get some nice big moves. Transition is sort of medium-term, scalping to short-term trading. Valtos UTurn is I think a little bit more on the short-term to, I don't want to say swing trading, but you could catch moves from the high to the low with it. Okay, so the Valtos Flip reads sudden, abrupt changes in the buying and selling, which often precede explosive moves. I think it's ideal for scalping and short-term trading. Here's some examples. I say short-term trading, I mean over the next, depends on the, say you're using a minute chart, the next 10 minutes, 15 minutes. If you're trading a minute chart and you're holding a position for 2 hours, you shouldn't be trading a minute chart. You should be on a longer time frame. And this is a 5-range chart, mini NASDAQ NQ, and you can see, this one, this sell didn't work. This buy, it kind of worked, tested the low before it popped back up. This sell failed. This sell worked. This was a nice big sell right down to a buy here. This is a mini Dow, again a 5-range chart. One signal right here at this high, and it traded from 18. I'll call it 18,315 down to 18, below 1800, 18,270, 18,280. It's a mini Dow. This time it's a 10-range chart, and you got your low here, swing low, and it makes a nice move up. Again, it's from 17, what you want to call it, 17,880. Sorry, 17. Whoops, sorry, 890 rather, all the way up, above 1800. 18,000 rather. It's a nice move, and you got another confirmation here. Say you just caught this move and you got out. Well, you got another buy signal here for the next leg up. The Valtos transition reads when the market is potentially changing from a demand-driven market to a supply-driven market, or vice versa. Again, I think this indicator is designed more for short-term trading. By short-term, people get lost sometimes when they're trading. They've got a position. Obviously, you want to let it ride as long as you can, but you also have to be smart about it. Don't let it ride to infinity. When I started trading many years ago, I'll say many years ago, it was about the early 1990s. People, what's your profit target? Infinity. I would be buying the Deutschmark, Swiss franc, 10-15 minutes after the open, thinking I'm going to hold it all the way to the close. The days that you had the big range, yeah, I'd make a lot of money, but there's times where it would go up most of the morning, then lunchtime it would turn around, and instead of booking a nice profit, I had either a small loss, break even, or a small profit. So when you're trading, you have to think about your time frame. Again, I see a lot of people, I have indicators that you can download for free on my website, and one guy messaged back, "Oh, this is crap." I tried it on the 4-range charts, and every trade I took was a loser. But then when I tried to ask him, how are you looking at the market? He never replied. But so I've been running 4-range charts for how many months already since then, and the indicator, it works, and I know people are making money with it, and I don't understand his trading. Maybe he's thinking he's just going to take it for 10, S&Ps for 10 points on a 4-range chart. If you get 10 points on a 4-range chart, fantastic. But if you're looking at a 4-range chart, you shouldn't be looking at a profit target of 10 points. You should have a smaller profit target. So when I say short-term trading, I mean anywhere between the next couple of bars to 15, 20 bars out. Beyond that, I think you're really pushing the envelope. I mean, that's just me. That's my opinion on how you should approach the time frames in your trading, but you should be cognizant of the time that you're in a trade. So how does the transition work? Well, again, it's looking for areas where a supply-driven market is changing into a demand-driven market, or the opposite. A demand-driven market becomes a supply-driven market. And what that means is, when there's a supply-driven market, that means the market's going lower. There's a lot of supply. When it's a demand-driven market, the market's going higher. There's a lot of demand. Everyone's coming in and buying. So what it's going to look for, it's going to look for these changes. Here, we went up, started coming off, supply in the market. Then boom, you get a little demand, and you see it pop back up. But then here, you get supply again coming in, and you get a nice little move lower. Now, people will say, well, here, I gave you a short here, but then, back here, it stopped you out. Well, I mean, come on, it's a 5-minute chart. You're going to hold it for, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 2 hours. I don't think you can do that. Again, and here's a bonds, a 5-minute chart, and you get the swing low. I mean, and look, it's got a nice move up there. Again, bonds, you make this move up, boom, you get the signal, it goes down. Here, this one kind of goes sideways before it goes up against you. The Valtos UTurn reads the price action in the order flow and looks for the points where buyers and sellers have given up and the market has a tendency to reverse. The indicator, I think, is best used for short-term and swing traders. But again, you could use it if you're scalping. If you're trading on a dome and you're looking for a level, again, what this U-turn does, it finds these areas where there's hidden support or hidden resistance that, again, doesn't show up in a normal bar chart. And how does it look? This is how it looks. This is a mini Dow YM 1-minute chart. And you got your swing high here, and then it sells off. You got your little pop up here and go sideways, then a couple sells here, and we come off a little bit. I don't want you thinking that every trade is going to be like this. You're going to get some or just go sideways on you. That's how trading is. There could be a big shift in supply and demand, but then all of a sudden someone else comes in, let's say there's big demand, but then, some big commercial comes in with a lot of supply and hits the market. It can just change, instantly like that. Don't think that, the market is static. It's dynamic. It's always changing. People are always coming in, reacting to what price is doing. It's crude oil, 8 range. You got this low here, pops up and sort of goes sideways, pops back, before it makes a move back up again. Crude 8 range, again, here you got your demand driving the market higher, and then boom, it's telling you, hey, there's an area up here, there's a lot of supplies coming to the market, it's hit the market, it could be ripe for a sell-off. And what does it do? It goes sideways and then falls over. What you would like, obviously, is to have, every trade work out like this, or, every trade instantly after you buy just goes straight up. But sometimes, you buy it and the market just sort of spins its wheels a little bit before falling off. Maybe the demand is not yet satisfied, and, the seller's still there selling, offering the supply. And then finally, the seller takes over and the supply just really overwhelms the buyers, because if there's nobody left to buy, what's going to happen when there's a lot of supply? The market's going to drop, and and then it drops off here from, what is that, 50.90 down to 50.30. So you gotta ask yourself, how do you want to trade, the hard way or the easy way? The hard way, well, I'll say the hard way. I mean, for me, it's easy, but for some people, this is hard, and I completely understand that. I get it. It's confusing, especially, when you've never looked at it. Again, you just see a lot of numbers, a lot of boxes. You don't know what the heck is going on. That's fine. There's no shame in that. I don't understand Greek. Doesn't mean that it's not a good language, right? I mean, there's things that people just don't understand and probably never understand. But, if you take that information that you're seeing in this chart in here and pop it into a nice bar chart, get the signal, hey, then you're using the power of computers, what they've been invented for, to make your life easier. that's going to help your trading. Yeah, it makes your life easier. It puts it in this format. But again, if you don't know what you're looking at, then your life is confused again. But if you take it a step further and take your analysis and put it in a nice normal bar chart like this, then that's great. So remember, order flow analysis is a tool, but don't let yourself miss out on its usefulness because you don't understand it. Now you can add it to your trading arsenal. I call it the Orderflows Valtos Indicator Suite. So now you can harness the power of order flow without having to read an order flow chart because the important information is plotted on your chart. One of the main reasons order flow traders barely share their knowledge with most other traders is because it's hard work and most people will not be able to do it. And honestly, it's frustrating at times. And it's precisely that most people can't do it that it will continue to work. After all, if everybody could do it, then everybody would make money, and we know that's just not logical. That's what makes order flow so powerful, is that the overwhelming majority do not know how to use it, let alone apply it to their trading. And take it a step further, there's not many people even know that it exists, this information. But it's all out there in the open. It's there for your interpretation, and use it in your trading. It'd be like learning to fly, or flying an airplane, but without all the gauges. Can you do it? Yeah, of course you can, but it'll make your flying a lot easier if you have altimeter, all the little gauges that tell you, how high you are and how much fuel you have left. It's information like that that's useful to you, and it's available to you, so you should use it. So, in trading, as in life, only a few people are truly winners, and the rest are losers or break even at best. Successful traders are the minority. You should always be trying to avoid being part of the majority if you want to come out a winner. If the majority is losing, don't do what the majority of people are doing. Change it up. Now, I said there's 3 indicators. There's the flip, there's the transition, there's the U-turn. And you can put them on a chart separately, or you could put them all on the same chart. Now, if you put them all on the same chart, maybe you want to change what they look like. This is a chart. I have all 3 indicators on there. They're all giving the same, triangle up or triangle down, red for sell, blue for buy. I mean, you could change it. You could adjust the size, however you want to do it. It's all customizable. But, I just want to show you, when you put all 3 together, how it looks. Now, sometimes you're going to get signals that don't work. Say you're just using one indicator and you get, you hit a bad streak, with 3 losers in a row. Well, if you're adding a different indicator in there, maybe instead of 3 or 4 losers in a row, you get 2 losers, a winner, 2 losers. So, it's helping your trading percentage a bit, as opposed to sitting through 3 losers in a row. Nobody likes to have losers, let alone 3 in a row. If you have 3 in a row, you start questioning, the meaning of life. But, if you could break it up sometimes, it's going to make your trading less stressful, which is what you want to do in trading. So here, this is all 3 of them. You got a buy here, a sell, which didn't work out, came right back with another buy that worked out, a buy, another sell. It's picking almost every, I'll say every turning point, but it's picking turning points, as you can see, and that's what you want to do. Or, confirmation. Say, you got to sell right up here. You start going down. Should I take profit? Well, you get, maybe you take profit. Then you get another sell here, confirmation that you should still be short. So you get short again. Okay, so you're getting short. You're still short. You get a buy here. Okay, maybe I should cover. Okay, well, you cover, then it just heads lower. Okay, you're kicking yourself. You get a buy here. Okay, maybe I should buy. But then it comes right back with a sell. And it continues down. Again, these are the 3 indicators working together on the same chart. This is a euro currency. It's a 1-minute chart, and you can see, this one didn't work out, this one didn't work out, but then, you got one that did. People say, oh, you got 2 losers in a row, this sucks. I want something that gives me 80%, 90% winners. I mean, come on, be realistic. If you could get, something above 50%, then that's great. Because not every winner, everyone says, oh, you have to have 3-to-1 reward to risk. I mean, people that say that, they're just theorists. They don't actually trade. There's going to be times when you're just happy to get a tick out of a trade. Instead of getting 5 points out of the S&Ps, you're just happy to get a tick out of it. It's like Tiger Woods in golfing. Sometimes he shanks the tee shot, but then he makes a recovery, and makes par. He's happy at that. It's not like, oh, I got to get a birdie on every hole. Yeah, you would like to, or an eagle on every hole. You would like to, but the reality is there's sometimes you're gonna shank your tee shot off, and you're gonna be playing recovery, and trading is very similar to that. So okay, loser, and then you got a nice winner, another nice winner. That's what trading is sometimes. You shank your tee shot off with a couple bad trades, and then you get the nice recovery there. You don't think you can make everything back in one trade. It's a process. I'll say it's a numbers game, but it's a process. You have a loss. Okay, start thinking how you can recover it back in the next trade and the next trade. Again, this is all three here. So you get this buy here, and it didn't really work out, but then boom, you get the sell right after that. And it's a nice sell down. You get this low here, picks the low, comes back up. Sell didn't work. Sell, yeah, maybe not. Maybe you got stopped out on the second one. Then you get some more buys. So you're getting this nice move down, this nice move up, this nice move up. Crude oil, so minute chart. This one didn't work out, went sideways, and then boom, you get the sell. Comes right down into this low. This low probably would have stopped you out, but then this one saying, hey, this is the low, don't miss it. And it goes sideways before it makes the move up, and then these don't really work out. This one does. Are you willing to risk a couple of little losses like this to catch this move? You should be. But everyone thinks they just look at this and say, oh, I suffered 2 losses. Then they don't take into effect that, oh, they could have had this loss, this winner here or this winner here. It's just something for a lot of people. Maybe they're not properly funded, margined. They if they're trading E-minis, they got an account with $5,000 and they're trading 10 lots. You got 5,000 in your account. Maybe you should be trading 2 lots, not fully maxed out. That you have a loss like this that it sort of handicaps you. Again, Nasdaq. This one, a little bit work. This one kind of works out. Then boom. If you, again, say you took a little bit of a profit here, then it gives you another buy here right before it shoots up like this. Get a sell here, it comes down, but then you get another buy here, and it shoots up again. That's the beauty of mixing a couple of these 3 indicators together, is because there's going to be times, like I said, you're going to get maybe a couple of little losses, dings like this, but you want to catch this, you want to catch that. So whether you're a scalper, a short-term trader, or swing trader, I got you covered. These indicators are my private indicators that I've released to a limited few traders in my inner circle. My inner circle is a closed group of traders that I work with, and it's not open to the public. It's just it's people that have shown to me that they really want to know order flow and learn order flow. But a lot of people have asked me about my inner circle, and I don't want to take too many people in, but I've decided to do a limited release to the trading public of these indicators. The indicators run on NinjaTrader 7. We'll currently get them ported in the next 2 weeks. This is January 21st right now. So hopefully by the end of the month, they'll be available for NT8. And when you buy the indicator package, you'll get the upgrade to NT8 is for free as soon as it's available. I'm still on NT7. I haven't made my own personal migration to NT8 yet, but I'm hoping to do it in the next few weeks. So why am I offering these indicators at such a great deal? Well, I want traders to be able to take advantage of using order flow in their trading. I do a lot of training of traders, yet many just can't wrap their head around order flow. And with this package of order flow indicators, I think it will enable a lot of traders to profit from order flow. So go here, www.orderflows.com/valtos.html. Again, I named these after myself because a lot of my indicators that I had released, over the last couple of years have been copied by other people, and they're calling it, the ratio algo, or algo this, or algo that, because algo is a buzzword that attracts traders, new traders thinking, I got to have the latest algo busting indicator, when it's just all bullshit. What it is just simple order flow analysis programmed into the computer to make it your life easier. Again, if you know order flow, you can look for these things yourself, honestly, but it takes a year. I'll say, I hate reading you have to have 10,000 hours of screen time. I think that's just bullshit. You have to apply yourself. and think properly. I know people that have come in and started trading, and within 3 months, bang, it made perfect sense. They didn't have 10,000 hours of screen time. There's certain people that take to it. There's certain people that don't take to it. And this is designed for the people that, it's a little bit slower, that it just doesn't come instantly. People could, it's like learning to play the violin. Some people just take to it really quick. Others, struggle. Not everybody is going to be playing at Carnegie Hall. So again, go to my website, orderflows.com/Valtos. You can learn more about the indicators there. I got a big explanation, more in depth than this video. So thanks for watching this, and I hope to see you on the inside.